Michael, if I start with you, what was your main takeaway? Do you think they're being unfairly punished, the share price down 4% today?
I don't think so. I think the biggest reason it's down 4% today is that it was up over 40% since Christmas. I think the stock has really put itself in a leadership position again after good performance around the Golden Globes, after pushing through a price increase as we get through the next couple of quarters. So to me, the big takeaway is Netflix is really doing a lot of things right in the short term. They have this engine where they're developing tons of original content. They have a green light from investors to do that, and that content's bringing in a lot of subscribers. It's a nice virtuous cycle, and it doesn't look like it's going to stop anytime soon.
So that's the bull case, Alan, though. You're on hold. Why?
Yeah, I do have a hold. It's more for valuation reasons, but I will say I thought it was a very good quarter. They reported yesterday they beat on sub growth. The miss on revenue was almost strictly due to foreign exchange. I mean, $183 million. It whacked international revenue almost 10%. And then free cash flow, which is the other bugaboo people have. Netflix was minus $3 billion in free cash flow, but $2 billion of that was for content and development. If you're a manufacturer making widgets that it didn't release yet, you wouldn't hold that against them. And that's $2 billion of the $3 billion.
Alan, one statistic in the numbers I can't believe. They still have 2 million paying DVD customers.
Yeah, it's kind of shocking.
Kind of shocking. I mean, it's totally shocking. I don't even have a DVD player anymore. So what does that say about how many people have shifted onto this new streaming service and how many more people they can capture that are out there?
Yeah, I mean, they've grown their subs each and every year. So this year was about 30 million. Last year was about 23 million. The year before that, 17 million. I think they continue to grow. They're growing in the U.S. about 5 million a year. It may be a little bit less this year because of the $2 price increase, which was a pretty aggressive price increase, but they're growing internationally much quicker.
So, Michael, I mean, a few headwinds. First of all, competition. That's always been a story, but the competitors are really ramping it up. Strong dollar, which we see can hurt. How about higher interest rates? Is that a big one?
It's a very modest headwind to cash flow as they take on more debt. I mean, the leverage ratio for Netflix is really quite reasonable, so it's not that much debt. When you look at the grand scheme of things, and I really feel like it's more about the tailwinds to subscriber growth, and then, the valuation was mentioned earlier. It is an expensive stock for sure, but that can be warranted when you have a subscription business model with recurring revenue. There's a lot of visibility towards that. We think Netflix is going to double its paid subscriber base by the end of 2021. That's just really, solid growth. And so, the stock is going to be volatile because of the valuation, but we feel like the fundamentals are going to keep delivering.
Alan, what's your price target and recommendation on the stock?
So we have a hold on a $395 price target. Should give you a heads up. I mean, the first quarter is going to be a little bit low on revenue growth because they're going to still have the same headwinds, and the price increase doesn't take effect yet. But revenue growth should accelerate each quarter as the year goes on.
Michael, part of your case there is the explosive growth in subscribers, and yes, we're seeing that really in international, but are they as valuable on international? I mean, it's not as profitable, right?
Well, it's interesting because we are getting much slower growth in the U.S. now. We're adding 1 to 1.5 million subscribers per quarter, whereas internationally they're adding 6 to 7 million per quarter, and sort of consistently outperforming their guidance there. The interesting thing is that if you look at the vast majority of countries that Netflix operates in, and you just look at the income potential in the most wealthy households, Netflix is still very early in penetrating most of even the higher end of those demographics in a lot of those countries. So they price the product at a level that's on parity with the US, and in most countries that's really out of reach of most consumers. So I think one of the things that Netflix is going to have to do sometime in the future in markets like India, where they might be a little more penetrated of the wealthy households, they might need to figure out a way to tier the service and come out with a lower price tier. They've been reluctant to do that anywhere, but it's something that might be on the horizon in the next year or two.
And on that note, for the US subscribers, do you think they're recession-proof, the way they've been able to push through these price hikes?
Yeah, I do think they're recession-proof. I mean, the last two $1 price increases had zero impact on subs. A few years ago, they had a $2 price increase to the grandfathered subs, so it was a 25%, and that was the one quarter where they did have a little bit of a slippage.
What about international? What's your feeling about pricing there?
I think international can be as profitable as domestic. The ARPU's a little bit less right now. They used to
revenue per user.
Yeah, they used to break out the costs. I think it's a bunch of cost allocation. They don't anymore. And the profit per sub was pretty similar internationally than it was domestically.
Alan, if there's one of the new other rival streaming services that's coming out to watch that is potentially going to be a threat that you think can be most successful, which is it?
Clearly Disney. I mean, Disney's the name. They've got the brand. They've got the content. They're going full board into it. But I actually think it may help Netflix. I think as Disney launches its service and AT&T launches its service, it may accelerate cord cutting, which may just get more people going on to streaming. And I think
people would get Netflix and Disney Plus? They would have both?
They'd get Netflix and Disney Plus. And Disney Plus, Iger said that they would price it at a discount to Netflix. In fact, Netflix just gave an additional $2 pricing umbrella. So I think you'll get Netflix and Disney Plus, and then you just have to figure out a way to get your sports.